I will now talk a little bit about informed trading related to the 9/11 attacks. You can read it all in the internet, what I have done, because this was an article that was published by Asia Times Online, which is the biggest English news website in Asia. It gets published in Hong Kong, and I would really like to recommend to read it because I actually have paid it, the translation from German into English. I have not received money for it, I have paid for my work. Okay, and I also have conducted an interview with an American professor for economics, and in particular he is an expert on econometrician, econometrics. This is statistics, econometrics, because there are actually scientific papers, 3, that prove on a statistical basis that there was informed trading going on related to the 9/11 attacks via put and call options, at least in one case call options. And now I give you a little definition what put options are. And this is one problem related to this topic because it's very technical. And there is a very famous put option trader of the past living now here in London, and you may have heard about him. His name is Max Kaiser. He is the presenter, for example, of the Kaiser Report. And actually in March he was talking about this with me on the Kaiser Report. And we have talked about this for years now, this topic. And here's the definition. And he said, put options are, if they are employed in a speculative trade, basically bets that stock prices will drop abruptly. The purchaser who enters a time-specific contract with the seller does not have to own the stock at the time when the contract is purchased. Related to the issue of insider trading via put or call options, there's also a noteworthy definition by the Swiss economists Remo Crameri, Mark Chesney, and Laureano Mancini, notably that an option trade may be identified as informed but is not yet legally proven when it is characterized by an unusual large increment in open interest and volume, induces large gains, and is not hedged in the stock market. Now I explain this. Open interest describes contracts which have not been settled, been exercised, by the end of the trading session but are still open. Not hedged in the stock market means that a buyer of a put or call option holds no shares of the underlying asset, by which he might be able to mitigate or compensate losses if his trade doesn't work out, or phrased differently, one does not hedge because it is not necessary, since one knows that the bet is one, dead sure thing. In this respect, it is not really a bet, but because the result is not uncertain, but a foregone conclusion. So what have those people done? And I expect that these were peripheral players. These are not real insiders, but they were informed that something was cooking. So, yeah. So, what they have done is basically that they bet on certain companies that were involved related to the terror attacks of 9/11. For example, reinsurers like Munich Re and Swiss Re. This was done through the futures market in Frankfurt, which is called Eurex. It's a merger between the German futures market and the Swiss futures market. Now, I have done an investigation on this, and I have talked with the supervisory, I look up what it's really called in English, because there's these are the regulators, the federal regulators of for financial things in Germany. And the federal financial regulator in Germany, the Bundesanstalt für Finanzdienstleistungsaufsicht, BaFin. And I wanted to know from them if they have really investigated this, because the central bank of Germany, the Deutsche Bundesbank, told me you have to ask them, not us, if anything was done about this. And they said, well, yeah, we looked into it, but it was only in very small portions done, and it is time constrained, you know, that we could not really prosecute this, even if it happened. But this is really, I think, a stupid argument, because if it has taken place, it was connected to mass murder, which is not time constrained. But for them, the deal is done. Okay. Other companies that were involved were, for example, banks that were placed in the Twin Towers, like Merrill Lynch and Citigroup, and of course the airliners, United Airlines and American Airlines, and the company that produces the type of airplane that was used, and that was Boeing. And there is one real interesting scientific paper. There are three, but one that I would like to talk specifically about. And this was published by Professor Mark Chesney from the University for Finance, of the university in Zurich, and the department is for finance and banking. So he's a very, he is a serious scientist. And they have proven that there was actually this insider trading going on, and I think it was for 19 companies. And the statistical ratio is above 95%. They're that much sure that this took place. And their problem is that they would need much more precise data from the stock markets themselves, but those stock markets don't give them those data. Okay, that's one of the problems, but you can look this one up, this scientific work. It was published basically by the University of Zurich itself. And well, one other thing is that this whole story does not get picked up by the mainstream media. There's only one article that was published in 2007 about this in Les Echos, which is a financial magazine in French, and from yours truly for the Asia Times Online. That was it. And I've talked about this with Paul Zaremka, and he said one thing, that the economists are really scared about this topic. And he said, well, I have asked him if these three scientific papers were ever addressed by other economists. And he said, to be frank about my profession, the real reason is that they are scared. I know my profession. Ordinarily, when you have a topic which is as hot as this one, or maybe a topic not as quite as hot, but has huge social implications, you want to research it because you could make your career really moving forward. I'm just talking in normal academic terms. So you would think that there are other econometricians out there who would want to do their own study or criticize the other studies by doing it in a very serious way, hoping that it will move their own professional career forward. And it's not happening. And I think the reason is what I have said. They are afraid. This is too big for them to deal with. They are afraid that even getting into the topic gives it credence. Let me say it again. Even getting into the topic legitimize it. Every German has problem with this word. Okay, so I have give you a little overview of what I have done. The other thing is related to insider trading was related to the company Conva. You may have never heard about this. Before the attacks, shortly before the attacks and during the attacks, there was a transaction going on with credit cards. Some people, unknown who, were taking millions of dollars, hundreds of millions of dollars from the banks that were seated in the WTC and outside, and took it or brought it to someone to another place. And Conva was they were contacted by, for example, the FBI and the Department of Defense of the US to reconstruct hard disks from the computers. Now you would think, well, everything was vaporized on the facility of the World Trade Center. No, they were able to do this. And even the German television was reporting about this. But as you may assume, I did contact Conva, or the public relations firm that has Conva as a client, but they don't want to talk about this anymore. So yeah, these are some of the things that I want to point out related to insider trading.